So today I'm sitting with Linda Voe, a lender with New American Funding.
Hi guys.
Welcome. Thanks for sitting with me today.
You're welcome. Thank you for having me. Huge compliment or pleasure to be here with you.
Oh, thank you. So, for our 20 viewers out there, we really want to talk about the mortgage business. Basically, what the loan process is like, some of the rumors out there, some of the myths, some things that people don't know, or maybe they're just afraid of.
Yeah.
So why don't you kind of start with what's the process like? If somebody's even thinking about buying a home, what's the first step that they should do?
Honestly, and it sounds super simple, Justin, just reach out to a lender. Have that conversation with your realtor and a lender, because both of us, you and I, are gonna offer something completely different and have different answers, right? You're gonna be the expert on homes and dialing in their dream home, what they want. Mm-hmm. I'm gonna make that happen financially on the financing side. So we're gonna have two different perspectives, but two very, very important parts of the home buying process. And really, the most important part is to get off that fence. Just to start that conversation, because guess what? Just by talking to me or you does not mean that they have to be committed. Yeah. And they will talk to a realtor all day, every day. You're selling them that dream house, that, the vision of their family. Mm-hmm. And then they come to me and they have that hard conversation. And that's a lot of the times where we start to lose them. So
I think that's a good point, is that with the realtor, maybe they get to dream a little bit. And then when they talk to the lender, not to put down the profession, but maybe you're the dream crusher. It's like,
correct.
What? Yes, you want 12 bedrooms and 6 bathrooms, but
for $1,200.
Let me show you this condo.
Right.
So once they talk to a realtor, they talk to a lender, what would be the next step? Are we running their credit, or what's happening there?
No. So the first step, like I said, is just to have that conversation, really 10, 15 minutes. Mm-hmm. I want to get to know them. They're going to want to get to know me, because we're going to work very, very closely together. Mm-hmm. And it doesn't matter. I get a lot of people telling me, I don't want to buy for another year, so should I even have this conversation? Absolutely, because a 10, 15 minute conversation is going to be the start of everything. Okay. Now, after that conversation, if it's something that sounds good enough, or they're happy enough to move forward, then we establish the financial baseline. And this is what's going to be incredibly important. I get a lot of clients, I just want to know what I qualify for. And I understand that. But I also need to know who you are financially, and what your goals are, which is what that 10, 15 minute initial conversation is. Because it's not about talking about numbers. It's not talking about what you can and cannot buy, how much you have. It's really just us getting to know each other. That second conversation, and it can happen in the same initial conversation, mm-hmm. or we can reschedule it, whatever they're most comfortable with. Okay. But establishing that financial baseline, who you are, how, we look at the 3 things that hold up a loan: income, assets, credit. That establishing the financial baseline is exactly looking into that. And so it's really completing an application that tells us those 3 things: how much you make per month, credit. In addition to your credit score, we also look at your monthly debt obligations, and then assets being your financial net or your net worth, essentially, how much you have for the home buying process, but also anything that you have left over. Okay. Because we do look at that as well.
Okay. I think that's another kind of myth or big fear here in Las Vegas, or the people, at least clients that I speak to on a regular basis, or people that I talk to on a regular basis, is that they don't think they can afford a house. Right now, the average house costs right around $450,000 in Las Vegas. So what kind of down payment, how much money should they have in the bank if they want to buy a $450,000 house?
And that all goes back to your financial baseline. Mm-hmm. There are so many programs. So the way we do it, so once we establish that financial baseline, this is who Justin Moody is. Mm-hmm. Then my job is to go through and look at what programs you can qualify for. And each program is going to have their minimum requirement for a down payment. Just because that's the minimum doesn't mean that's going to be your minimum. And that's a whole different conversation. But if, let's say we go with a VA loan and you can qualify for a VA loan, well, that's 100% financing. You don't need a down payment for that. Conventional and FHA are going to be 3 to 3.5%. So a lot of people have that misconception, like I need to have 20% of 400,000 saved, and they're looking up this huge mountain and feeling defeated. But if you just nip at it a little bit at a time, you don't have to have that 20%.
Yeah.
You need the money for the down payment. You also need the money for the closing costs. And that's what talking to a lender is going to help you with, is understanding these numbers. Because at the end of the day, it's all a mindset, right? Buying a home has to be a mindset. When somebody comes to me and say, I don't think I can qualify. And I was like, is it because somebody told you that? Or is it in your head?
I think I get that a lot. Even though I'm not a lender, I get people all the time, I can never buy a house. I don't qualify, my credit's not good enough, I don't have the money.
Yep.
And they just don't understand that you don't necessarily have to have a 750 credit score to buy a home.
Yeah.
You don't have to have $100,000 in the bank. Yes, home prices are definitely higher. Interest rates are definitely higher than they were several years ago, but that hasn't stopped people in the past from buying homes. Before we started talking, you had mentioned that you had a passion for first-time home buyers.
Yeah.
Now, I know just kind of in my experience, but never really working and not knowing the inside knowledge of it, there's a lot of programs for first-time home buyers, right?
Absolutely. We have these down payment assistance programs. We have these grants that are out there available to them. And so a good lender, somebody that knows this, because there's a lot of, not all lenders are equal, just like not all realtors are equal, right? You have to work with somebody that, one, you trust and knows their way around the job. And so a lot of these lenders, they're gonna stick to the basic FHA, conventional USDA, VA loans. A good lender is going to have access and knowledge of all of these other programs. It takes a little bit of extra work. So those down payment assistance programs, it does take a little bit more finagling, more structuring of the loan, so to speak, and then putting you within those guidelines.
Okay.
But yeah, I have a down payment assistance program going right now, and he's the perfect candidate for it. And so I have a flyer, and I'll give that to you guys. So if you guys wanted to post it or whatever.
Yeah, we can put it in the comments down below.
Yeah, Nevada has at least 8 down payment assistance programs specific to this state.
Okay.
And so, what people don't really understand is like, I know of this, like a big one here in Nevada is Home is Possible. And that's with through Nevada Partners. Anybody can go on there, look at the criterias, and then, they may say, oh, I don't qualify for that one. So I just don't qualify for down payment assistance programs. But you're missing out on all these other potential programs that you could qualify for. So I would encourage buyers to leave the yes or the no's to the experts of whether or not you qualify.
So to quote the old cliche, knowledge is power.
Correct.
Understanding everything that's out there and having it put in front of you by somebody who that's what they do. Right. Can really open somebody's eyes to potentially buying a home or deciding, no, I need to rent for a little bit longer.
Right. And then, and I'm the type of lender too. So like you said, my passion is first-time home buyers. There are veteran loan officers out there who've been doing it for a long time, and they're kind of burnt out on the coaching and the teaching, right? A lot of my clients are first-time home buyers because I have the time, I have the patience, and I was at one point a first-time home buyer. Yeah. And I appreciated my realtor walking me through the process. And this was before I became a lender. I appreciated my lender who took the time and helped walk through everything that's required. Yes, I didn't quite understand everything at the end of the day, but I still was able to buy my home. And I appreciated that, and I model a lot of how I do it as a lender from the guidance and experience that I had, because I had such a great experience. Okay. And I do get this a lot with clients. They're like, well, I've already talked to a lender, and they just flat out said, I don't qualify. I go, well, did they give you a plan? Did they tell you? Because people who say, I could never qualify for a home, that is false. That angers me. Everybody can qualify for a home. And just because you don't qualify, you may not qualify now, but there are things that you can change in your finances, your life, your savings, your job to be able to qualify down the road. And just because it's a no now, doesn't mean you have to completely shut down and never want to buy a home. A home is forever.
So
right?
If somebody comes to you today and you go through the 15 or 20 minute conversation, they lay out where they're at, and you're able to say, hey, look, you're not going to qualify today. And it's not, and what I like to look at it is it's not a personal thing. They're not telling you don't deserve a home or you can't have a home. They're just your situation in life at that particular moment, your credit score, your income, wherever it may be, your debt is saying, no, you can't buy a home. It's not the best thing for you. You give them a roadmap on what the steps that they need to take.
Absolutely.
On how to get there.
And we go back to looking at those three things: your income, your assets, your credit, right? And if you don't qualify for right now, and a lot of, most people would I don't qualify because I know my credit score is not there yet. I need to get it better before I even start the process. And my question is, if your credit score is not the greatest to begin with, what makes you think that you can go at it alone to improve it?
Yeah.
And that's not a slight to anybody. There are a lot of people who can fix their credit on their own. I'm a little bit weary of credit repair companies. Lenders, it doesn't matter if we have the initial conversation, the application, and this is what I want to emphasize. It costs you nothing to talk to us. You don't pay a dime until you go to close on a home. Meaning you're pre-approved, shopping with Justin, closing on the home, in contract, you pay me nothing. So in that roadmap, I can look at your credit and tell you, well, this is where you're at. I have simulators that show us if you were to do X, Y, and Z, we can get your credit score up. And that's gonna look different for everybody. And so by putting that roadmap together, that's how I tell them, we're gonna assign every dollar a job. Are we gonna use that dollar towards paying down debt, to lower your debt ratio or increase your credit score? Or are we going to save that dollar for the down payment and closing costs to buy the home? Because it has happened. Linda, I've been working on my credit for the last year. I paid off all of this debt and now, I'm debt free. And I look at their credit, I'm like, well, your credit's still not that great. We still need it a little bit higher. We could have taken that $10,000 that you put towards student loans or medical bills towards saving to buy the house. You don't have to go at it alone. You can have a professional take a look at it and give you advice. Doesn't mean you have to follow it, but at least you're not shooting in the dark, right?
Gotcha. Okay. So two more questions for you. I don't want to take up too much of your time. Las Vegas sees two predominant buyers. People from out of state relocating, and casino or gig workers. Yeah. Now, let's start with maybe the latter, the casino and gig workers. They don't necessarily have a big hourly or a big salary. They work on tips, or how do they navigate the loan system if they're commission based or tip based?
So if you have been doing it commission or tips, we actually have a program where we can just take a 1 year average of your income. Not everything gets reported on paper. Guilty. I come from the food service industry and I completely understand how that works, right? You make a ton of money, but you're not always reporting it. So we have other alternative loan programs. Now we all know about they call it conforming because it conforms to the government standards. Government says, we need X, Y, and Z to back this loan. If they fall into that category, then they can have a loan. But not everybody is going to fall in those boxes. So we have other loan programs. A bank statement loan is another possibility, right? When we take your regular deposits in your bank account, add that up over 12 months and take an average of it. Now that's your income, and that's for self-employed borrowers as well.
So that might be an insider tip. If you're, you're working on tips, you're a gig worker, deposit your money into the bank.
Correct.
Okay.
But that goes back to, let's talk about it first.
Okay.
And it all goes back to, let's talk about it first. Let's find out what your game plan is so that I can lay that roadmap for you. And then you can stay in touch with Justin, on the updates on what the housing market is doing, because it ebbs and flows, right?
Absolutely. So then my next follow-up question to that would be, we have so many people moving into Nevada from other states, California, Arizona, places like that. And they may not necessarily have employment secured, or they're starting a new job, a new type of job. What can they do to get into that loan process? So
there's two parts to that, right? So if you don't have work already established, we will need to have that established. That still doesn't mean that you don't, well, I'm going to get the job first, then have the conversation with the lender. We can still have that conversation because we can still talk about what your credit is and how much you need to have for the home buying process. The second part was, sorry, what was the second part? It was
if they're going into it, if they have a new job, so say they've been in construction for 20 years in California, and they come to Las Vegas and now they're going to become a nurse, and they're starting that new job the day they move here. How long would they have to wait to start qualifying for it?
So it's going to depend. It's going to depend, right? Because everybody thinks, and that's a really good question, Justin, because and this is a huge mortgage myth. Because you went from one job to another, you have to wait 2 years. False.
Good.
False, false, false. Because depending on how you're paid as a nurse, if you're salary, if you're guaranteed full time, we just need that letter.
Okay.
Because you had to have gone to school, hopefully, to be a nurse. Hopefully. And so that school history can be counted as work history in that field.
Okay. Now it has to be from the employer, or can like my mom write the letter?
No, it has to be from the employer. It has to be HR because we are going to verify it.
All right.
But we get a lot of people, transferring here from work for work, and we just need that transfer letter. We just want to know, what will you be paid while you're here, like once you get here. And you can actually buy that home, relocate here, and move into that home immediately as opposed to renting.
Okay.
For the first 6 months while you're here or something.
All right. And then one last thing.
Yeah.
Interest rates. I mean, it's the elephant in the room. Everybody's talking about it. Everybody's thinking about them. What's going on?
So the rates are relatively steady right now.
At the time of this filming, which is the middle of February 2024.
That being said, yesterday the rates took a little bit of a poo.
I saw the inflation report.
Yep.
So yeah,
Due to the CPI reading, the Consumer Price Index shows that inflation isn't quite where the feds want them to be. Now, here's my message on the interest rates. If you are not actively shopping right now at this moment in time and ready to put an offer in tomorrow, don't worry about the rates. Because the rates today are not going to be your rates.
Agreed.
And it's not going to impact you until you are ready. So I get a lot of people, well, I don't want to buy a house because the rates are high. Well, how does it apply to you? What are the rates right now? Because people don't understand that timeline. That's part of what we need to educate them on. You have to have that conversation with your lender and your realtor. You have to start the home loan process, because let's say they're like, I signed another year lease. I'm not going to buy for at least another year. Okay, so are you going to call me in 11 months and tell me that you're ready to buy a home, only for me to run your scenario and you are not actually ready? You're 6 months out, another year out. Why not start it today, right? So why are you concerned about what the rates are doing today if you're not even going to be ready for several months? Because it's going to change. We blink our eyes and the whole environment changes.
That's absolutely true, especially coming into an election year.
Yep.
You never know what the rates are going to do.
Yeah, and that's exactly it. When the rates were tipping favorably towards the lower end for our buyers, January, early February, that's when everybody comes off the fence and they're starting the application and like, now I'm ready to buy a home. But then by the time they're ready, let's say we get them pre-approved, it doesn't really take that long for us to pre-approve them. By the time they're ready to go out shopping, rates have ticked back up. So they're constantly doing this. And
that's a good point too. Remember, if you want to save as much money as you possibly can on buying a home, you want to be in the market when nobody else is. So if you're waiting for those rates to come down, which they will, just remember the value of the home is going to go up.
Yep.
You can't change the price that you pay on a home. You can change an interest rate.
Correct.
So be in that market when nobody else is going to be my pro tip for the day. I really appreciate you sitting down with us.
Thank you.
We'd love to put your contact information in below. So if somebody has any questions, they can reach out to you directly.
Absolutely.
Or you can reach out to the Moody Olson team at moodyolsenteam.com. If you have any questions about the Las Vegas real estate market, or if you want to get in touch with Linda, or you just have general questions about mortgage, even refinance.
Refinances.
So remember to like and subscribe, smash that like button, hit the bell, get notifications, and stay tuned for more. Thanks for watching.
Bye, guys.